Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi mining community, welcome back to another episode of the Dig Deep, the mining podcast, and we have a returning guest who was on 4 years ago, so back in June 2021, some time ago. Dan Myerson, who's the Executive Chairman and CEO of Foran Mining, a company at the forefront of the copper revolution and one of the only single asset copper developers actively building a mine anywhere in the world today. In this episode, we're going to dig into why Foran remains undervalued despite its remarkable progress at the McIlvenna Bay project, now nearing 50% completion and on track for commercial production by mid-2026. Dan shares his insights to market sentiment towards pre-production copper companies, the strategic importance of Foran's Saskatchewan jurisdiction, and why now might be a pivotal moment for investors to take a closer look. We're also going to explore what lies beyond the project and how Foran is positioned itself in the copper market, grappling with supply constraints and long-term demand growth. Stay tuned. So we unpack the milestones, the macro trends, and the big vision driving one of Canada's most exciting copper stories. Dan, welcome back to the podcast. How you doing?
Mate, thanks very much for having me, Rob. It's really nice to see you again, and it's quite crazy to think that it's been almost 4 years exactly since we spoke, and just really looking forward to seeing how the company's changed from now and from then until now. Yeah,
certainly. For those that didn't listen to the previous episodes, which was 4 years ago, do encourage you to go and have a listen. But for those that may not know you, Dan, I just wonder if you can just tell us a little bit about yourself, about your career, how you got into mining, and how your career sort of developed to what it is today.
Yeah, sure. So I initially started my career out. I started with Morgan Stanley. It was sort of the time when I was finishing university was 2009, so not the best time to be looking for a job. But I was very fortunate to get one with Morgan Stanley. I wanted to go into trading, but they didn't really have anything other than in investment banking. So I went into their equity capital markets team, which was great. And through that, I met a guy who worked at Glencore, and Glencore was still a private company at the time. And I just became obsessed, and he was telling me I was chewing his ear off. I met him at a dinner party, and I was just chewing his ear off. At the end of the dinner party, he said, you know, you seem really interested in this. Do you want to come for an interview? And I was like, oh my gosh, I would love that. And then I joined Glencore in early 2011, I think it was, late 2010, and yeah, it was just the best experience of my life. Like I always say, it's the best school to ever go to. I just learned so much. And initially, I came up the ranks at Glencore and rose quite quickly as a trader. I initially cut my teeth in copper cathode and copper blister and copper byproducts, and then moved into concentrates, both zinc, lead, and specialized there. And then when we merged with Xstrata in 2013, sometimes you get lucky in life, and Glencore didn't really have anyone to take over running the assets, and I went on a trip with the head of assets from Glencore to North America, and so I got sort of doing the trading there, but I was also starting to get more involved in the assets. So the assets are the mines and smelters, and I just, when you start to see the technical opportunities, and when you understand the technical a little bit better, like I wasn't an engineer. I studied statistics and math and economics, and really it was there that I started to see the opportunity a lot more on the asset side of things, and then I just sort of gravitated towards that way, and Yeah, I mean, we wanted to buy Foran for Glencore at one point in time. I just couldn't really get a deal done. But I got along very well with sort of two of the main principals, who are still two of the large shareholders, and that was Pierre Lassonde and Darren Morecambe. And then yeah, and then ultimately in 2020, I decided that if there was ever a point in time to go out on my own, it was now. And yeah, joined Glencore as the CEO and executive chairman. Took all the money I had and invested it into the company. And yeah, we set out the vision. The vision back then that I sort of worked on with Darren and Pierre and the board of the company was, we're going to go out there and we're going to increase the size of the resource because it's clearly being undervalued by the market. The scale of what is here in this district, and as well as start proving out a district. So to keep doing exploration, but we're going to build this mine. And that was always the plan from the beginning. So yeah, we've done that. I mean, I can get into it in a little bit, but I mean, you tell me how you want to take the podcast, Rob.
Yes, certainly. Well, I just wondered if you can just give us a snapshot of Foran Mining. Maybe obviously when you joined, and then obviously I've got a variety of different questions to ask you. So just a snapshot of the company.
Yeah, sure. So sorry, I should have done that at the beginning as well. So I mean, like, Foran is as I think you said it best. We're the only single asset company building an actual greenfield copper mine in the world today, which when you actually say that out loud is quite amazing. That we are the only people building a greenfield copper mine. But more than that, we are also exploring and unlocking a district in Saskatchewan, which is an extension of the Flin Flon Greenstone Belt. It's quite funny, they've been mining copper, zinc, gold, and silver in Manitoba, the province next door to Saskatchewan in Canada, for over 100 years, and they never knew that they had copper in Saskatchewan until Foran. And that just shows you, borders are man-made, but mineralized belts are not. So it's a very exciting time.
As we've mentioned, we believe that you're the only single asset copper company building obviously a mine globally. Maybe someone in the audience may correct me on that, but I suppose like many other pure play copper companies, Forum is and seems to be undervalued relative to what they're going to be building. Is this a broader reflection of sentiment towards pre-production copper developers, or is there a structural disconnect in how the market is valuing companies like Forum? And I suppose in your view, does this need to change and for the gap to close?
Yeah, I mean, it's quite interesting. I think you got to take a step back and let's look back at like what Foran has done in the last 4 years. So as I mentioned, we set out to continue to grow the size of the resource. So we quadrupled the size of the resource, and we can extend it further. We can grow it and quadruple it again. The reason we don't do that straight away is because typically how these companies are valued is on a DCF. Now, a DCF only accounts for the first 20 years of an asset's life. And even then, so 75% of the value comes in the first 10 years in your DCF, and then 25% comes in the next 10 years. So it's virtually nothing after 15 years if you're using depending on your discount rate. So that's why, but the fact of the matter remains, we quadrupled the size of the resource. We then not just made one discovery, we made two discoveries. So we discovered the Tesla zone and we'll have a resource coming out next year on that, which is extremely exciting. We discovered Tesla in July 2022. We then discovered the bridge zone, which connected McIlvenna Bay and Tesla, and really was a huge game changer to show the scale of the deposit and really the scalable growth, because now you can double production or triple production from here. In one deposit is quite rare to have. So we made that discovery in, I think it was around September 2023. We then signed one of Canada's landmark collaboration and partnership agreements, or commonly known as a IBA. We don't like the word IBA, or the acronym, which stands for Impact and Benefits Agreement. And then we permitted the mine, just extremely rare. And then we financed the mine with some of the best backers in the industry and outside the industry. So we had Agnico Eagle come in. They now own 13.5% of the company, have invested over $275 million, which is a fantastic partner to have. I think you can make a very easy argument that they are the best mining company in the world. So to have them involved is just wonderful. I can't speak highly enough about them and how grateful we are for them. Obviously, to have Fairfax as one of our big cornerstones, they own roughly 22% of the company, is just incredible. I mean, Prem Watts's investment track record is actually better than Warren Buffett's, and people say about Prem, the only thing that he's better at investing is actually being a person, and you can see how that sort of trickles down the rest of the organization from the top. It's just a very honest, incredibly smart, and just a wonderful group to work with. And then obviously we had the Canadian Growth Fund come in, which is another huge milestone for the company, because also run by an extremely smart bunch of people from PSP in Montreal, but been wonderful to have them. So to have them as shareholders has been fantastic. So essentially, when we think about mining, there's three key risks. You've got permitting risk, financing risk, and execution risk. So we took care of permitting and financing. In our execution, we had G Mining Services come in. I think you can also make the case that probably one of the best mine builders in the world. You see what they did for Lundin Gold at Fruta del Norte with the Lundin team was amazing. And that's what they do. They don't do an EPCM type of approach. They actually integrate. It's called an IPMT, an integrated project management team. So it's run like an owner. They're incentivized like an owner, and just an incredibly smart and just great group of people to work with. I don't think I'll ever build a mine without G Mining ever again. It's been wonderful. So I guess, and you said like Foran's 50% complete. That's correct, and we are about 6 months away from production, which is typically when the best time to buy a developer is. To your point on the valuation, they're extremely undervalued right now, and that's because the actual risk versus the perceived risk is very different. And what I mean there, the perceived risk that's still involved is much higher. And than the actual risk, and really it's a function that mining but more so than mining than operations, construction is inherently complex and high risk, and things rarely go exactly to plan. So it is, you can understand how the market can discount it because of that lack of certainty, let's say there, but. What ends up happening is that you'll have like companies that are so steeply discounted to their intrinsic value that creates an incredible opportunity. I think the best or most recent example would be Artemis Gold, run by Stephen Dean, who's just probably one of the greatest mining entrepreneurs you'll ever see, I believe, and what they've built there. Stock will sit flat for a few years straight, and then as they get halfway complete in the construction, then it starts to take off. I mean their stock's up 500% in the last 18 months. And this happens time and time again. It happened with G Mining Ventures and Tocantinho. It happens time and time again. Lundin Gold, all these things. So I think the disconnect lies in perception and not fundamentals. And as I said, Foran is backed by world-class fundamentals. It's got a multi-decade life. It will go for potentially 100 years. I don't know. I know it will be more than 60 years. That's for sure. It's one of the lowest cost structures in copper assets globally. So one of the lowest cost mines in the first quartile. The scalable growth that it has is just incredibly rare, and as I said, that the deposit can double production or even triple production later on is quite incredible. The jurisdiction, I mean, Saskatchewan's one of the best jurisdictions in the world. I think jurisdictional risk is something that's also undervalued and not appreciated today by the market. So I think that's a huge thing. That's um, a disconnect again, if we use that word. And then ultimately the shareholder base. Like I think people can't understand the importance of that, particularly at this stage. As I said, we've got a 100-year asset. It's very important that we get the beginning right, because that's going to give you every opportunity for the next 100 years to really take advantage of that. And that's why we structured it with the equity and debt like we did, and we didn't use any streams or royalties or anything like that, because see, we've got copper, gold, silver, and zinc. So you could have streamed one of those things, but when you've got an asset that will go for multi-decade, multi-generation like we have, to give that away would be a complete disaster. So yeah, very grateful for our shareholders and what they've done. But anyway, I know I'm rambling, but I hope that helps you in terms of the valuation gap or disconnect.
Yeah. The progress at McIlvenna Bay has been obviously nothing short of remarkable, nearing 15% completion and targeting production, as we said, mid-2020, which is obviously a huge achievement. Given how much has already been accomplished, can you share some of the recent milestones and, more importantly, what exciting developments or even growth plans lie ahead as we move beyond commercial production?
Yeah, sure. And mate, you can also just say Mac Bay if it's easier, because McIlvenna Bay is a bit of a mouthful. That's what we call it internally. Um, I think, again, I can't emphasize enough that the hardest part of the build is now behind us. Typically, the hardest part in a build is the first 30% and the first winter you go through if you're operating in the Northern Hemisphere. So that's out of the way now, and then some, because we're 50% of the way done. We've had problems, and it hasn't been smooth sailings. We had port shutdowns where we got steel delayed. We had to recover and act quick to save the schedule there. We had government funding delays when Justin Trudeau decided to resign, and Parliament got prorogued. We've had a CapEx overrun, which we had to fund. So we've got all the big challenges behind us now. All the long lead items are at site. Half of them are installed already. We've got the people, we've got the labor, we've got the management team, we've got the operational readiness team, we've got the commissioning team. So all those things are there. So I think you'll start to see a lot more in the monthly updates that come on the construction side of things. Sorry, I forgot to mention we had the problem with the wildfires where we got shut down for 3 weeks. So it's been a hell of a tough 6 months. I think I'd love to actually look at a photo of myself when I first came onto the site, the podcast 4 years ago. I reckon I've aged like 10 years. But it's fun and it's rewarding, like when you actually see things being built and what it means to people. So it's wonderful. But yeah, I mean, again, just coming back to, so you'll see monthly production updates. We've achieved the stockpile is starting to come together. We've got 60,000 tons of ore already. We're going to have around 270,000 ton stockpile, which will be incredible for the mill ramp up. The commissioning team is brilliant. We've got a great group of people from Foran with our mill manager, and there's led by G and with G Mining and with Systemex. It's a wonderful group, and very, very strong. And then I mentioned our Tesla and Bridge discoveries. Bridge and Tesla, these discoveries are not really understood or valued by the market, in my opinion, today. And that's a function of when you look at things on a DCF basis, like, of course, you're not going to be including these things. So you'll see the resources and the technical studies come for Tesla next year, second half of next year, and then you'll start to see Bridge come the following year. So the growth machine within Foran, not just having commercial production next year, but all these other catalysts are going to be quite significant. So yeah, it's very exciting in that sense.
The Fraser Institute's latest update once again ranks Saskatchewan as the top jurisdiction in Canada for mining investment. How important is jurisdiction today, and why does Foran see its location as such a strategic advantage?
I think, mate, it's like similar to what I said at the beginning of the call, where I don't think people value jurisdictional risk correctly. I had a very, very smart analyst, his name is Ralph Profiti, once said to me, I'll never forget it, early on, he said he thinks that you should value the jurisdictional risk in line with where the sovereign bonds trade at, and then use that yield as your discount rate in your DCF. And I thought that was brilliant, because to apply the same discount rate to an asset in Canada where or a dictatorship in Africa is nonsensical to me. So I think that's something that's going to be felt more and more, and you see it in the cash cost and the after tax cash cost, essentially, because that's what happens. Like people think of Canada as a socialist country, and it might be so, but Saskatchewan and the federal rate in Canada on the tax side of things will make Foran one of the lowest after tax cash cost copper mines in the world. Today, with predominantly most of the copper today comes from Latin America and Africa, where you look at the effective tax rates on that, and they anywhere from 40 to 60%. So I've worked in locations all over the world, and I've never ever worked in a place like Saskatchewan, where you've got a province of 1.1 million people, very natural resources focused. That's what drives the economy. Very pragmatic and practical government. I'd say that's the best thing. The Saskatchewan Party is incredible, and they understand the issues and they can act quickly. So they're actual doers, is what I say. It's very much got that farming mentality where they don't have to call someone to come and fix it; they just fix it. So it's a really, really good place to work. So yeah, we're very lucky to be in Saskatchewan. Very, very lucky.
The copper price has obviously seen its fair share of price volatility this year. How do you view these short-term moves, and how does Foran fit into market facing structural supply declines later this decade?
Yeah, I mean, that's a very good question. I think there's a few things to answer in your question there. So I think a lot of people, when they look at the copper market, they focus. Everyone says demand, and they don't really talk about the supply as much as let's say you've asked in that question there, and really. I think that therein lies the problem, because demand is something very, very difficult to quantify. So in my prior life at Glencore, we would just zero out demand a lot and just focus on supply, and that's what would govern your view on price and things like that. I think today a lot of people are like, where do you think the price is going to go? And they'll look at the demand stats and all the demand data and things like that. But ultimately, they get it completely wrong every single time. But one thing, the best way to track the price or to forecast the price is to look at capital intensity of supply. So if you to look at capital intensity, you look at it from what it did between 2001 and 2010. Capital intensity grew from $3,000 a ton to $8,000 a ton. And what did the copper price do? Went very similar, from $3,000 to $8,000 over that decade. Now, you look at capital intensity figures, and as of last year, they were around $23,000 to $24,000 a ton. But the copper price is only at $9,000 a ton. So and you look back 100 years, and this logic holds steady and holds true, where your copper price will track capital intensity on a 1-to-1 ratio. So I think where the price needs to go is actually to the $24,000 a ton. So what's that, like roughly $10-11 a pound of copper. And now that might sound like a big call, but you watch what happens over the next 5 to 7 to 10 years and where the copper price actually goes. And I think you will see that it'll do what it's done for the last 100 years, and it'll track capital intensity there. So I think that's why it's so important, in particularly with a long life asset, to be first, to be that asset that gets into production at the beginning of the cycle, where, i.e. now, because then you capture all that upside for the next 10 years in price and print cash, and then you can build a war chest balance sheet, so that when things do turn cyclical in 10 years or 12 years, whatever it takes, you are then able to then go hunting and go do that. So yeah.
Looking at the share price, I mean, to me, it doesn't look like any of this is company reflective in the valuation. Looking at the investment curve and everything that's been accomplished, is it now the best time to invest in Foran?
1,000%. And again, I'm not just talking my own book. I mean, I just put another $1 million into the company, and I'm probably going to buy some more. But and I've never sold a share, and I have everything I have put into the company. Now, but you have to be objective about this thing. Like, you look at on the Lassonde curve, where what happens, and these things happen time and time again. And where Foran is on a Lassonde curve is at the very bottom of that trough, and it's about to go. So I guess the best way to say it is that Foran right now, the valuation where it's at, is the cheapest it's ever been in its history. And that, when you adjust it for risk, it is by far the cheapest it's ever been. So that's probably the most clear way I could say it. And as we said at the beginning, you look at these developers which transform into producers. It's that 6 months before production, exactly where Foran is today, where things start turning, and that's where you'll generate the greatest alpha. So yeah, I can't couldn't stress enough that probably now is the best time that you could ever have to buy the stock.
If you're looking at a bit further out, say the next 5 or 10 years, is Mac Bay a stepping stone just for something much bigger in the future for the company?
Yeah, I think I think Mac Bay on its own, with Bridge and Tesla and the down plunge of McIlvenna Bay, you're going to easily expand that in double production by 10,000 tons per day. The Mac Bay is 1% of our 140,000 hectare land package, which we've meticulously crafted together over the last, especially over the last four and a half years, but even before that. So I think you're going to see, like, it's these kinds of assets that are company makers, and it's happened time and time again. Like, look at, I'll use Agnico Eagle as an example, the greatest mining company there is today. I think they really were built off LaRonde, which started 45 years ago. They built that. They started at initially 2,000 tons per day. They then doubled it to 4,000 tons per day. They then doubled it to 6,000 tons per day. And then they went to 7,500 tons per day throughput. So 4 expansions, and today it's producing almost, it's still doing zinc, copper, gold, but in ounces equivalents, it's going to get close to 1 million ounces equivalent soon. And that's what happens. When you've got these systems that can just grow and grow and grow, these are company makers. I mean, when Escondida was discovered, a different mineralized deposit type to LaRonde and Foran, but when it was discovered, it was like 10% of what it is today. And I think that therein lies the opportunity. And the other thing is, like, what I said about how focused we were on keeping the low cost structure and not streaming away our byproducts or anything like that, and building a war chest balance sheet. that'll enable you to do things. But really, I think there's a tremendous opportunity to grow organically, and yeah, we'll see what makes sense inorganically, because ultimately scale is going to matter more and more, particularly with the growth in passive capital. But that being said, it's quite difficult to actually find deals that make sense.
And lastly, what's the outlook for the next 6 to 12 months as you head towards first production?
I think you're going to see monthly updates on construction from now until the end of the year, into commissioning and first production and commissioning starting from early next year. With commercial production, you're going to see commercial production in phase 1. Then you're going to see the Tesla resource, the maiden resource, and then the first technical study on our phase 2, 10,000 tons per day as well next year. So tremendously exciting year in terms of let's say catalysts. I believe that's what the market call it. But ultimately, a lot of free cash flow as well. So we're very excited about that after all these years.
Yeah, certainly. Dan, really appreciate your time. Thank you for coming on the podcast, giving us an update on Foran Mining, telling us about obviously your project, McIlvenna Bay, and your insights to the copper market and everything else. And obviously speaking about Saskatchewan as a mining jurisdiction. If our audience wants to reach out to you, if they've got any questions, and obviously follow the story as you head towards first production, how can they go about doing that, and what social media platform channels are you on?
Yeah, so I believe we're on all the social media platforms, LinkedIn, and I'm not on any social media, so I'm not the best at answering, but it's LinkedIn, Instagram, and I believe we call it X now, no longer Twitter. So there, but otherwise, if you hit us on our website, which is www.foranmining.com, and there'll be links to get in touch. And yeah, we'd love to hear from you. Love constructive criticism or ideas or anything like that. I mean, we're a very transparent organization, and love any feedback.
Yeah, great. We include those in the show notes accompanying this podcast for easy access for our listeners. So, Dan, hopefully you can come on the podcast next year, maybe mid next year, just before first production, or just into production, and give our audience an update. That'd be good if you could.
No, I'd love to, and thank you very much for having us on the show. It's been great to watch the show grow, and yeah, really, really nice. So thank you again. Yeah,
no worries. Thank you for listening. Hope you enjoyed that episode. As always, appreciate your continued support. Please keep sharing these episodes far and wide. And obviously follow Dan and Foran Mining as they head into construction and first production next year. So as always, appreciate your continued support. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.